Good morning, everyone, and welcome to Morning Market Movers. My voice is coming back slowly. And this is where we do some live analysis for day trading, take a look at hot spots in the markets for the day. It is March 15th, the Ides of March. If you're Julius Caesar, beware of the Ides of March. It was not a good day for Julius Caesar. We do have some hot spots going on in the markets today. Oil down below $100 a barrel. So we've got oil coming down, gold heading back down towards $1,900 an ounce. So, gold couldn't get through 1,800, somehow managed to punch up above 2,000 on its way back down, right in front of the Fed, who is going to start their meeting today. But tomorrow afternoon, we expect to get the 25 basis points, a quarter of an interest rate hike. That's what's now expected, although 50% or 50 basis points of 50% of a point hike was probably more appropriate. I don't think they're going to light a fire with everything that's going on in Europe at the moment. So that's what we've got going on. We got oil down, gold down, equities looking to open in the green, and then we just had the PPI number, the producers, the producer price index came in lower than expected. Price is still going up, but we were expecting a 1% increase, only came in at 0.8%. So certainly some interesting things in the markets. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. In fact, I don't even think I introduced this, that I'm Todd Rich and I got Brian Caprice from Keep Trading Simple. I'm still on vacation brain. Now, I will tell you, I'm going to drop this link in right now. Brian's going to be doing a full-blown session in just over 3 hours. So if you haven't registered for this session, I just dropped the link in there. We're going to run through things here, quickly over the next 10 minutes. But definitely come back for a full-blown analysis for what's going on after we get the open, and then what to look forward to for the rest of the week, and going through everything and where things look and where you might want to be looking when for the rest of the week. I mean, here I've got gold and oil. The charts look nearly identical. Oh, look, oil actually bounced a little bit on the PPI numbers that just came out. Gold continued to go lower. All right, here, Brian, I'm going to flip it over to you. Let's kind of run through
Sure.
everything that we just talked about quickly, and then we'll do the full-blown session in
Mhm.
a few hours.
Yeah. So, currency front, there's really nothing moving right now, minus the dollar CAD, and a lot of that is associated with oil, as you mentioned, with oil being down below. My joke yesterday was, even though that oil is down $14 or $30 in a week, did anybody see their gas prices go down? I have to report, the gas prices at Sam's Club actually did go down about 8 cents yesterday, from yesterday to today. So we actually did. It took $30, and that equaled 8 cents.
8
I don't
cents.
know. Yeah,
Why is
yeah,
it though that
amazing.
when oil goes up,
Yeah,
oil goes up $1 and your
and
gas goes up 50 cents. Oil
yeah,
goes down thirty
I have
dollars, it
no
goes
idea.
down 8 cents.
Yeah, I don't know. Like the $30 up, it went at like $1.20 or something like that up, and then when it went $30 down, it went 8 cents. It doesn't seem
And it
fair to me,
happens
but
so fat. They raise the price immediately, and then it takes
yeah, 6 months to go
couple.
back down.
Yeah,
Yep,
that's how it is.
OPEC at the pump. But the dollar CAD is really the only thing moving. Everything else, even like pound dollar -2, dollar yen -3, pound yen -6. So not really a ton of movers in there. Euro pound is up a little bit, 33 pips. In 24 hours. That's decent, especially with the news we just got. So, thus far this morning, news wise, again, we got some really bad economic sentiment data out of the EU and Germany. Again, kind of expected. They were expecting it to be much, much lower. The forecast, the previous were 48 and 54, and the forecast were 10 and 5. So they expected it to be really, really bad. Again, there's war right on their doorstep. So it was expected to be lower. It came in as negative numbers. Again, nobody really knows it's the first time that Germany's had to spend money on defense. And again, negative number was expected to be much, much lower, but doesn't bode well for that. Now, our PPI was definitely, again, it's not negative. The Empire State Manufacturing Index was actually coming up negative, although that one, is kind of it's strange. They missed that one. Last time it was supposed to be negative and came in, and again, the Empire State one has been a little bit more kind of rolling of a dice, for lack of a better word. But the PPI is obviously a big number. Now, it did miss forecast by zero point 0.2, but it was still another positive zero point 0.8. So it's not like it's starting to go backwards or there was like a hiccup. Again, they've missed this one so many times. They've been off, 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 off. And you can see last time, they missed it by such a large amount last time. The forecast was 0.5 and it came at 1.0. They were up +5. This one missed it by 0.2. So you're still, again, accelerating higher than what we were. There was no adjustment last time showing us that it was that big. So again, it's still an issue. We still know it. Now, the core minus food and energy rate is lower, but again, remember, this is a month-over-month basis. Most of the spike in oil has really happened in the last 2 weeks. So that number, oil has not, and gas and transportation has not been factored into this core number. Again, that's excluding food and energy. So not necessarily probably the best reading, and that's probably why it's considered an orange and not a red right now, because that number's a little bit off. But again, today is day one of the Fed kind of what are we doing speech, right? That'll be tomorrow, first thing in the morning. So, seeing some negatives over here. I think the big headline that's really going to affect them most right now, and again, seeing this, again, they already know what's going further. The question is, how much can the market handle all at one time? Right now, the forecast for tomorrow is going to still be 0.25 raise. Will this make any changes today to it? I don't know. This is the big story out there. Again, China, actually, that was yesterday's story. This one is today's story. Looks very similar, though. The lockdown total for China is 51 million people. Okay. Yeah, this is a
It's
big
a lot
one.
of people. I mean, that's a
Yeah,
lot.
yeah, and remember the way that they handle. I mentioned this yesterday. They handled COVID differently than we did. We were at our peaks, and it's like, oh my God, other countries are handling this so much better than we are. But the reality was, everybody had a different way to handle it. We never experienced anything like this before. Theirs was, oh, you have 6 people in town. That's it. Your entire town is locked down. Don't leave your houses, right? Ours was a little bit different. It was a little bit more fluid, and they said this is why that the West is having so much harder of a problem, because people aren't going to take this type of strict. Well, long story short, Omicron is really what helped us get us to where we are right now, where so many people were getting it. It didn't care if you were vaccinated or not. China never experienced that. So the reality is, this is probably what they're seeing. I don't know. I'm not a doctor. I don't play one on television or anything like that. But remember, they never had the numbers that we had, the spikes that we had, because of how they were dealing with it. But at the end of the day, Omicron is what helped us get to where we are right now. So question is this their Omicron? It could be. But 51 million people locked down. Remember, the first time, the reason why all the prices went crazy and everything got really, really bad, and it was because of supply. You remember the supply chain issues, right?
Yeah, this
Now,
is not going to help.
auto companies, chips, and things like that. They were like, "Yeah, we're making a ton of money, even though we have chip problems, right?" And remember, Christmas, we're going to have shelves that weren't stocked because of supply chain. Well, 51 million people locked down in China. That kind of goes back to that supply chain thing all over again. And that's something that's also going to be weighing on the Fed. So,
Yeah. By
going
the
over
way,
the charts.
wait, before you do that, I just want people to take a look. I mean, if the markets are closed there, because we do have the Hang Seng Index, the China 50. If you're not paying attention, it's down 11% in the last 2 days. I mean, it's gone from 14,000, and it's headed well below 13,000. I mean, it's just getting hammered. So yeah, their economy is kind of getting beat up over those lockdowns, and
Yeah,
that will.
it would be the same thing if we went
Yeah,
back to a lockdown, or all of a sudden if we did the same thing, our economy would take the same type of hit. So we've
yeah.
already seen it
I mean,
happen once. So yeah, so it's not the best type scenario. Again, it's definitely going to be another factor that the Fed weighs to how much they're going to raise. The reality is, if they do a 0.25 and we don't see any really major supply chain disruptions, then again, it's going to go absolutely insane, and people are going to be super mad. I mean, people
because
are
they
going to
didn't
be
go
offended. It's
faster, more.
Yeah, like, why didn't you do this? You had the control. Because remember, the people that it's hurting the most are the lower income, families in America. The people that really need it the most are the ones that are being hurt the most. And again, they mentioned that people vote with their wallets. So the higher that this runs, people will start to have a bitterness towards the Fed for not taking enough action when they had the ability to. And I think that's kind of where we're at right now. If you look at the president's lowest ratings, it's the way that he's dealt with the economy and inflation in general. So if they
And,
don't move fast enough, it's only going to get even worse.
and
So
we're also waiting to hear what they're going to say. I mean, to make sure that how quickly they can run some of the stuff off of their balance sheets. Stop doing the purchases, get things off of the balance sheet. Um,
Yeah, because remember,
along
we
with
are still quantitative easing right now. So we have QE in and we're raising interest rates, which has never really
which
happened
is
before.
really
Yeah,
that
it's
makes it like you're trying to fill the bathtub while you're pouring water into it,
yeah,
pulling water
coffee
out.
and sedatives all yeah,
Yeah, it's like
coffee and
you're
melatonin
battling
all at the same
yourself.
time. Yep.
One
Yeah,
does one
yeah, and
does the other.
it's
They got to stop the purchases. That's what they got to
yeah, it
start
doesn't
doing.
yeah, it doesn't really make sense what they've done, and they're trying to make everybody happy. But the reality is, I mean, the market moves at impulse and corrections. You know, they always say, you know, you got to take one step back to go two forward. That's kind of where they're at. They're trying to appease everybody, and again, there's politics involved with it. But the reality is, sometimes you have to do things that hurt. I mean, if you look at the way that even something is minuscule as a forest, right? If a forest does not have a forest fire to get rid of all the underbrush and growth, the forest will actually die out. It's actually a regenerative process. The market's kind of the same way. You got to kind of get rid of the weak so the strong
Yeah,
step forward. And right now they're trying to make everybody out there perfect.
doesn't work.
It's you know make everybody happy, and unfortunately that's just not how it works. So yeah, it's nice. You know, again, we keep passing the buck down the road, and that's the problem right now where we're at. You know, 40-year high inflation. You know, yes, our numbers are not super high. You know, our interest rates are laughable right now to what they were over those 40 years. And people are like, oh my God, we're going to raise it, and nobody's going to buy homes because of it. You know, there's all kinds of problems that come down the road. So their lack of inaction is action in itself. And unfortunately, the way that the things have been switching back and forth, and everybody kind of wants to take the even keel, right, in everything, the economy and life and politics. Unfortunately, the way we're at right now, everything is so polarized where it's like, oh, we're in now, we're doing all this bad stuff. And then
Yeah,
everybody doesn't like that. And then the other side gets it and it's like, oh, you did that to us. Now it's our turn. And again, that's why we saw the swing after Obamacare came in, and we're seeing these swings go back and forth. And then it's, well, let's have a revolt because these guys voted for this. It's like, well, you put them in power, so you have to deal with the consequences of your action. Nobody's able to look forward, it seems like, in this day and age. And the Fed has a very difficult job today and tomorrow to figure out going forward. Are we going to
yeah.
do the right
How they're
thing,
gonna
or are
paint
we
this
going to try to
picture?
make everybody happy?
So
Yeah.
So let's
Yep.
jump in, take a quick look at some of
Yep.
these charts while we got some time on, at least before we do the full blown session, 3 hours.
Yeah.
But let's definitely look at these equities because we are looking to open in the green, and then we've got oil and gold. Just because they're just falling off a
Yeah,
cliff.
I mean VIX wise right now we're down a little bit. Again, we obviously in the overnight, God knows what can happen when it's active hours over in Europe. But where we were yesterday, we kind of closed at the end of the day, kind of a pop and push back down again. Because of it, all the indices are in the green. Yesterday morning we were sitting here, we talked about that kind of reversal level coming back up again. We found basing, and that's exactly what happened. It's funny. We talked about 10:30 reversals yesterday, about what time they kicked in. This green candle is a 10:30 reversal into that level of basing, and then there was your big drop yesterday afternoon. So there's kind of the play. Looking at it now, again, we've been rallying up, and if you look to see when this rally really started this morning, here's the 3 o'clock candle right here. So the Europeans really kind of stepped in, and by really 5:30, that 5:30 candle is the European reversal time. It's been nothing but straight up. So going in today, like I said, I think there'll be some headlines. Are the markets justified to go higher? Probably. Again, a lot of today will also be positioning for what they feel is going to happen tomorrow. Again, remember, rising interest rates is not necessarily great for the overall stock market. 0.25 is what's factored in right now. If they do 0.5 like they were supposed to do 3 weeks ago, that the market I don't feel is prepared for that. That will be a scenario where we see the market rally up and then boom, tomorrow it kind of clashes back down again. So again, today I would expect there not to be major headlines. The PPI numbers, it's kind of like, oh, they were bad. That means they're going to go with 0.25. And the market is very, very happy about that. So right now we're going up. Really ES-wise, I mean, again, there was some basing in here. Even if we don't use that. If you wanted to look fib-wise, where kind of the hidden targets are going to come in. And remember, these two black lines weren't sell areas. They were just kind of the Globex highs and lows, and we were talking about traps. But, right now, kind of up in that same area. We're in that same, close proximity. Right, that area is up at right around 42.38. So a little bit of room to run right now. It would take an hour and a half to get up there. I think that's probably kind of a, that could be an end of the day kind of target where we're looking for. I do think there'll be some profit taking from the European session, but I think that 23.38, although we've hit it a few times, it was a pretty decent roll yesterday. That could be a potential level for tomorrow. Again, we'll discuss this a little bit more at the noon analysis session today. because we'll see what kind of the opening print does. But I think that's one to kind of keep on your radar. NQ yesterday, same thing, 10:30, just happened to pull back right to that. I mean, the 10:30 candle is um, actually it's the very very peak of that. It's the green candle sitting in the middle,
Right.
and
Yeah. Right
again came
before.
right back up. Yep, it was a 23.6 at that point, and a pullback level, and a 10:30 reversal. So again, extremely powerful strategy. Since that push down, we're really kind of in the same area. It's just more or less gone sideways. So we'll kind of see what that does this morning. Actually, let me pull it down. You can see, yeah, we're flirting with a 23.6. I wouldn't be surprised if NQ pulls back a little bit. And again, you may say, well, why is NQ is the strongest right now, but why would NQ pull back? Well, remember, a lot of the shortages that we had because of supply chains in
Technology.
China
Yep.
was chips,
Yep.
processors and chips, right? And again, a lot of that was again, not necessarily all from China, but they were one of the locations that was building it. So that was kind of where a lot of that came from. And again, they also, when we start talking about supply chains and technology, NQ should take a nice little dip down. YM also took the same thing. It went a little bit higher than that level yesterday. And again, there was a few levels there, but same thing. It took that big drop, and now we're kind of basing back again. So YM's an interesting spot today. And then Russell, same thing. It never really had the pullback at 10:30, but it was, if you guys remember yesterday morning, we talked about it, just banked off that 50% retracement level. It's there. If we move it down now to go to a little bit lower, we're talking about this 1930, and we hit it, based in there. It's like, yeah, it's probably going to break. And it did just by a little bit. Right now, I would say 1980 would be a level that I'm looking for right now inside of this. Yeah, in the Russell. 1982 is actually, taking this top to bottom is right where the 50% retracement is. There is a level of basing there that I do like. And again, it had a nice reaction off of it. So I think that's one later on today that you kind of put a target on. We'll see what the opening print looks like. Oil-wise, oil continuing to deteriorate. Again, not really surprised at this one. And again, we can keep dragging this down to see where the next nice little buyer is. I mentioned yesterday that I was looking for 98.74. We got to it late last night. I was hoping we were going to hit it before 5 or 6, and we ended up having to go till about what? 9 p.m. last night. I was looking for that target before I was going to look for any reversals, and I knew we had the gap a little bit lower. Again, 51 million people being locked down. Again, that's a huge hit on demand. Huge hit on demand. So I don't think anything has really changed. Iran's trying to get in there. Venezuela, we're begging them for some oil. But the reality is 51 million people suddenly locked down, not driving. That's a huge hit to this, which brings it all the way back down again. So we'll see.
Yeah.
Again, I'm sure Russia's not happy about that. But 96 is a heck of a lot higher than what it really should be right now.
Yeah. I'd like to see it
And
down below 70.
that would be great. Our gas will still be $4 a piece, but that's
Yeah.
fine. It's 8 cents for every $30.
The cynicism is thick.
Yes, and like I said, and the funny thing is about this too, and then we're gonna move on. People are talking about this is they asked they were talking to somebody in the e industry, and they were like, hey, listen, is this all the reason why everybody should move to electric? And she's like, yeah, I'd love to say yes, but the reality is we can't handle everybody going to electric, nor do we have enough material right now that we could actually support everybody moving to electric. So it's kind of a moot point. I'd love to say it, and she was
Yeah.
from the e industry.
Yeah. Well, let's
Just
go look at
those things don't
invest in a lithium mining manufacturing company.
happen. Mhm.
They're
Actually,
gonna need a
nickel. They
lot
said
more
nickel right
lithium.
now. Yeah, nickel is now the linchpin right now. They said nickel
Yeah.
prices are all highs. We just don't have nickel. Without nickel, we can't build EV, vehicles.
Yeah.
So no matter, even if everybody wanted to, God, imagine if everybody suddenly said, you know what, I'm not spending $4. I'm going to go buy a Tesla. Those things would go through. They can't produce anything now. I mean, get in
Yeah.
line for that Tesla.
Well, unfortunately, the Ford and GM and everyone else come out with their electric vehicles too.
Yeah,
So.
they are too, but it's the batteries. The batteries are killer.
And they'll all have a different plug. So.
Of course, that's like, yeah, it's like, well, I mean, that's the drama for self. Google, my wife is Apple. We have 2 different chargers and they don't work. I've tried, same thing. Also, guys, natural gas. I said yesterday, I was definitely bearish natural gas still because seasonally, it didn't quite make it all the way down to the 448. I was like, this is an area where I'd be willing to look at, and it took a nice little pop, and now it's pushed back down again. So the commodities are also getting hit, and a lot of this too is also, wow, 51 million people just locked down. Ooh, So again, oil more of a lockdown scenario. Natural gas is lockdown / following oil / seasonal change. Gold.
Gold.
Talked
This
about
is.
yesterday. I said
I don't
gold.
understand why gold
Get
got up
short.
to
Get short.
that. They chased it
I
up
know
to
why.
over 2,000, and we know the Fed's going to be raising interest rates. I mean, that was a very short ride.
Yeah, I mean, this basically this was you're not doing 0.5, you're going to do 0.25. Okay, that sounds good. That means more inflation's coming, and that's exactly what happened. And then some other factors came in,
Yep.
profit taking. People were like, oh, that's it, 2,000. They're
More
putting gold
people
in
anticipating
emissions.
that, thinking it's
Yeah,
a flight to safety. This, I mean, I
yeah,
for gold to
not
head right
understanding it.
back down to $1,800 an ounce would not surprise me at all.
1890 is the next level. And I mentioned it yesterday. Really, anytime we get any decent pullbacks, and you can see it's actually been very hard to get a decent pullback, it's not
Yep.
pulling back. It's just continuing to grind. It's been hard. And again, there's a few buyers over here, but really, until we have a gap and a test, I don't really have anything on gold till all the way down here at 1888, 87. So again, the Fed will move this around a little bit tomorrow, but I think at this point in time, it's kind of like, oof. I mean, they're going to raise it. They're going to start. We're here.
Yep.
Everything that led to this was we got a month to go, right? We got a couple weeks to go. We're not doing 0.5. We're going to 0.25. So this is what trading is about. Long-term holders of gold are like, ouch, this hurts, but this was awesome. Remember, this
For
is
a
why, in
trading
my eyes,
opportunity.
trading
Yeah.
tends to be a little bit better than investing because, again, there's a ton of money to be made, but now we're at the decision time, and you can see what happened. We're even lower than what we were before. They mentioned that 0.5, so that's a big deal. And again, silver also following suit. I mentioned
Yep.
silver getting back down to 24 by the end of this week. We touched 24.50. We're within 50 cents. It's pulled back a little bit, but it's trying. It's trying. So again, commodities is an interesting spot, and overall, it's not like the dollar has been determining where they're going. Again, the dollar has now hit this one level about four times. So the dollar is actually at a position too where it's pulled back. Are we going to get if we get the 0.5, dollar will explode. The 0.25 I think is already factored in. I don't think we'll see too much. And even bonds. Remember, look at this hit from bonds yesterday. They gapped down and went lower, and they're pulling back a little bit, but bonds are also getting blasted. Again, money's rolling back into the indices. So
Yep. And we're
again,
seeing that.
The 0.25 is what everybody loves, because that's cheap money for a long time.
Yep.
So
Until they, still they start jacking it up a little bit more
yep.
quickly. And we will get some color commentary on what they're doing to the balance sheet in terms of their purchasing, which is amazing that, we haven't completely cut that off yet. Well, with that, we went a little bit longer this morning, but Brian's going to be back in 3 hours. So I did drop that link in there. Be sure to register if you haven't already. We'll get a view into what we're looking at today after the open, but then it'll also be setups for the rest of the week. Any questions for Nadex, please email us, customerservice@nadex.com. You got questions for Brian, you can catch him at support@keeptradingsimple.com. I'm also available if there's anything that you'd like to hear us doing more of or less of, you can please email me, todd.rich@nadex.com. What we're looking at today, equities all looking to open in the green. We're waiting to see, what the Fed talks about at the meeting today. The decision comes out tomorrow, although it's wholly expected to be a 25 basis point hike. And we're seeing oil backing off down below 1,800, gold down towards heading down toward $1,900 an ounce. So the commodities getting hit, equities going higher. Great trading opportunity. Brian and I will be back. If you can't catch us in 3 hours, we will be back tomorrow morning. If you like what we're doing, it would be great if you gave us a like on Facebook or YouTube or wherever you're watching it. We do appreciate that. Otherwise, Brian and I will catch you either in 3 hours or tomorrow morning. Good luck in the markets, everyone. Thanks for joining.